Good evening, everybody. It's Ken at Tortoise Capital for the Nightly Strategy Podcast, April 1st, 2020. I want to start off just with a reminder of where we were yesterday in U.S. Steel. We're gonna see that when we do a deep dive on the trade of the day, because this is going to support the idea of core and turbo, or in this case, turbo and core. So we've been interested in U.S. Steel for a while because it has, in my opinion, postured to be one of those industrial companies that are going to be mandatory for the rebuilding of the American trades and home nation manufacturing. You can't be a nation without steel. So it's the nation's steelmaker. Well, we've been trading at core and turbo for a while now, and yesterday, this was some money that we made in it. On the intraday trade. Let me get my little cursor going here. Right. So yesterday it had gapped up and was sideways quiet channel, and then we got three positions intraday into it, and it was trading around 640. So yesterday the urge was the VWAP was around 570, and then it was around 585, and then went up to about 610, and then when it peaked up in this moment, it felt like it was at a new level at about 640, right? And then the rest of the day sort of happened the way it was going to happen. Well, today let's see if I can find the darn it, where's my today was this kind of a day. It was actually pretty horrible. What had started off as a pretty good week last week and continued pretty well this week. We're just looking. This was the up until yesterday. We'd had the RL10 had bottomed out. We had 7 or 8 days in a row of pretty good work. We had the RLXD. We had a PSAR flip, and then today it just got smashed. It was a big gap down. Had a little run intraday and then got crushed going into the close and finished very poorly. Penetrated the dragon. And was a big kind of a turnaround day, really. So it hasn't invalidated this nice run up from the swing low, but it gave back half of the gains of the last 8 days in a single day. But on this kind of a day, U.S. Steel ends up finishing pretty well. If we can, let's see if I have it on here. That's not showing for me. Okay, here we go. So on this kind of a day, U.S. Steel we're going to see was up 3%, while the market itself was down 4.5%. So U.S. Steel had some juice today that the rest of the market didn't have. So that's part of the intraday narrative of what's going on in U.S. Steel. So U.S. Steel was on our radar screen. So I want to talk you through this position now. Well, it started the day. I get my cursor ready here. So yesterday's VWAP was down here around 610. No, I'm sorry, it was higher than that, and it gapped down to 610. And then there was real buying pressure all morning. So in the usual way, we buy that second leg up. So we get a belly in the 10, a peak in the RL10. it pulls back, finds support at the VWAP, and then takes off again, and we buy it right in here in this little, in that little bend of the river there, in the dragon's elbow. When it takes out the Z3 boundary and the hump of the RL10, we buy a second position. It moves another distance, that same leg up. We buy a third position. It makes a peak, pulls back, finds support in the dragon. The PSAR holds, moves up another leg, and then sells off. We get that next RLXD, and so we cash the first leg of a turbo intraday trade in the usual way. So I look at that really as an urge to buy U.S. steel while the market was being smashed, because it didn't gap down as far as the rest of the market. And in this little run up, it did better than the market. And then you notice around 11:30-ish, it starts collapsing. Well, we're going to see that the whole market collapsed at that time as well. So, meanwhile, back up into this one. Now, what I notice here in this next trade, which is a scratch, is a collapsing dragon. All right. So what we had was we had the exit. Then we have a swing high in the RL10. It makes a bottom. It moves up and then rolls over again. So in this little space here, I should probably, maybe I can make that smaller so it's even harder to see. I'm kidding. Oh, too much. Should have done that before. So now we have a peak in the RL10, a belly in the RL10, a peak in the RL10 that is lower than the previous one. So we have this downward pressure. The whole way up, we've had a series of higher highs and higher lows in the Dragon and the RL10. But when we get up into this region, this low is actually lower than the previous low, and then this high is lower than the previous high. So we now have, it's rolling over. This is actually like an owl entry in here. So I draw this blue line in the following way. You know, I start with the belly of the RL10 and I just draw it across. And now when price collapses through there, I get short in this red dot. That's a collapsing dragon. All right, so I have a high, a lower high, and it's breaking through. That's a collapsing dragon. Now, if I had sold short inside here, that would be a pocket. But I waited for the collapse, and so I get short here. And then the market sells off. A little bit, and then starts to retrace. And at this point, U.S. Steel was better than the market. There was a little recovery in the market, so I just scratched that trade. Well, that trade does not go up any further. It rolls over one more time, and now when it comes below the belly of this RL10, this is another collapsing dragon. This is collapsing dragon number 2. And this one is money. So, to sort of recap this, on the way up we do hybrid frog and get our positions in and cash it on that RLXD. Then we notice lower high. This now becomes collapsing dragon, and now I've shifted my orientation. Notice how the VWAP was joining the play, and then right around in this area, it just levels off. That means volume is disappearing, and without additional buying pressure, it's selling pressure. Around 11:30, the rest of the market takes a nosedive. And so while this is getting smashed, the rest of the market is getting smashed even further. But U.S. Steel is in better shape because it's up 3% when the S&P was down 4.6 and the diamonds were down 4.4. So there's a 7% difference in performance intraday. So that means people were buying U.S. Steel. So now we're in collapsing dragon number 2. I want you to notice the peak of the VWAP. is right about here. So I'm going to draw a horizontal purple line over here and say, when we get into framing the swing trade out of this thing, that looks like an important price level to me, as is the peak of this Z3 excursion. So when this thing was failing, the Z3 line to the upside was here. And then over here, this was the absolute peak of the Z3 excursion when everything was joyful. So this purple line here, that Z3 excursion, is also the previous peak of the RL10 and the Dragon. So this looks like an upper limit of a reasonable price that people were willing to pay for, but not beyond. Whereas this one, this line here, at that Z3 excursion, the max Z3 excursion of the day, if price ever got higher than that, that would be a really amazing psychological state change, right? And then, so I've got the VWAP, I've got this peak of the Dragon, and then the maximum Z3 excursions. We're going to see those three price levels when we go further. So meanwhile, back to the collapsing Dragon. So the first collapsing Dragon was a scratch, no worries. Rest of the market's really starting to accelerate its selling, so I'm short. I buy the second position. I short the second position here on a collapsing Dragon below this RL10. When it breaks down below this Z3 line in here, and it's really the same loss as this, so right around this on a money management, I get the third position in. It goes down a certain ways. Then there's an owl entry, and I just scratch the whole rest of the position. So that position comes off. I should say that whole trade comes off. Now this is where I stop day trading U.S. Steel, because it's really the afternoon session and the whole market is quieting down, and this thing drifts into a sideways quiet channel. So let me back out of this a little bit so we can see a little better. Yeah. So now what I'm doing, after this blue line, I'm now more interested in the swing trade circumstances. And I'm interested in stalking this for a swing trade because of reasons. And what are those reasons? Well, those reasons are that I noticed over in here there was a lot of urgency to buy U.S. Steel, more so than buy in the market. And I made good money on the upside, and even after the sell-off occurred, this thing at this point in time is still up 3% for the day, while the S&P is down 4.5%, and the Dow is down 4.5%. And XLB, the basic materials that this is a member of, is down 3.5%. And Walmart's only up 0.43%, and the rest of the Dow is getting smashed. So there was a lot of residual strength in those two symbols, U.S. Steel and Alcoa and oil. That's sort of like an industrial America right there. Nothing else was even close. So it seemed to me that there was still a lot of buying interest in U.S. Steel, and that was reflected in the willingness to buy it while the market was trying to recover, and the fact that it didn't lose as much as the market during the sell-off, and that while the rest of the market was continuing to fail, this U.S. Steel sort of locked in around 650. Now, I thought this was a really attractive area to be thinking about buying it. Now, the other reasons I think there's more residual buying is I look down here at 1 o'clock, and you see this little bump? The same bump that got me out of this with an owl. There was a little buying pressure, and it pulled back. It didn't fail here. There was buying pressure here. And there was the start of another little quiet buying pressure in here. All of those are reflected in the MACD histogram. So there's this little pulse of buying about every hour on the hour. And that, to me, feels like accumulation buying. That, to me, feels like guys that are willing to buy this at 640 or 650 knowing that reasonable price excursions are 680, 710, and 740, where it's already been today. And it got to those price levels on a day when the market was getting smashed. Imagine, if you will, in a market that is in bear volatile. Oh, you're not seeing the. Oh shit! Just a minute. Oh, guys, you needed to tell me that sooner. Here I've been talking to this chart, and I had you on the wrong screen. Sorry, Pete. What I will tell you is that the recording of this thing is being done off of my local machine, so the replay of this will be fine. It's a lesson worth replaying. So to recap, and this is the chart that's uploaded in Patreon too for the guys that are following along. So this was the morning buying urgency. This was the two collapsing dragons that paid off really well. This is that sideways quiet channel. This is the upside price indications of the VWAP, the peak of the VWAP, the Z3 max excursion, and the peak of the dragon, and then the maximum Z3 excursion up here. This was the buying pressure that I saw early in the day, which was better than the market. This stack of performances of symbols and sectors shows the intraday relative strength in U.S. steel at plus 3%, with Alcoa at plus 4.5%, while the market was down 4.5%, and the material sector was down 3.5%. So there is residual strength in U.S. steel, and I'm noticing after I've stopped buying, I've stopped my day trading here at 1 p.m., I noticed three little surges intraday that are keeping U.S. steel at this price level while the rest of the market is selling off. So I look at that, I interpret that as saying, well, maybe that's accumulation buying. That would help explain it. So I'm stalking this trade all the way through here, and then as we're now at 3:20, there's 40 minutes left in the session, and it hasn't failed further, and there's still a return to the VWAP wouldn't surprise me. I realize, hey, if I can buy it down in this region, I have some upside potential up to 670, 680, 715, 740, and this thing could go really well. So now I'm going to start stalking the entry. So I just I study and I watch and I wait, and then what I notice is as we get closer to as we get closer to the close, this is where I was studying. I made a decision. I want to own U.S. Steel overnight because I believe that it's a coin flip about how the market may respond tomorrow. And if the market is up, then I would expect the leaders of today should do pretty well tomorrow. And so things like Alcoa, XLB, U.S. Steel should do well. And that would mean that tomorrow it could get to today's VWAP or get beyond today's excursion pretty nicely. So if I can buy it down here at 640 and put a stop in below the Z3 excursion of the day and where the opening VWAP was, this is the place where all the market makers were willing to buy it, and that was the low of the day, and it never looked back really. So if that's sort of my execution stop down here around 610, I'm able to get 10 cents of price improvement by just waiting and seeing, and I buy it in the last 10 minutes of the day, where when the RL270, the fair value, has come up and joined it. So I buy it at 640 with a 30-cent execution risk. And then my upsides are all the way up to 740, so that's like a 3-to-1 just on a return. So in the swing time frame, I see this as a good chance to get a nice position, and I'm able to fund that overnight position with the money that I made on the way up and on the way down. So U.S. Steel has earned the risk capital with positive gains that I'm going to risk some of that money in U.S. Steel overnight. So when I'm thinking about the categories of money in the portfolio, I can take a little more risk with money that I've recently earned than money that is in my core seed corn, if you will. So I'm only playing with markets money on this one. So now in a larger posture, just to kind of finish up on U.S. Steel. I tell you what, we're almost an hour into today's lesson. Let's get to the. We'll do the daily report. I will record the speed run and put it on Patreon. I don't want to hold you up any later than we already have. Get this moving. Give me half a second. If this reloads, then we'll do the speed run real quick, because I actually think this is an important one. Appreciate your patience. While that's loading in the background, let me go through the daily report, because we do have control over that one. So we've already seen the market health check. I've talked you through that one. We're in pretty good shape there. Let's see. We're still in bearish volatile. We had the 3-day look back, dramatically oversold today on that big loss. Meanwhile, all of the other NDXs are in the low or middle of the NDX neutral period. The risk Z still remains abnormally volatile at minus 1.79. Although we're in the spring, this is still treacherous day-to-day trading with an emphasis on intraday first, and only very small and fewer swing positions because of the inherent volatility of bearish volatile. Okay. No signals in channeling overreaction, because we're 18% under the 200 period moving average, so we're deep into a strong bear. The 10-day max pain candidates: Boeing, American Express, Walgreens, JP Morgan. Simon Property Group got absolutely smashed today. Our swing trade on that one. Oh, is that paying off? Holy mackerel. Dow tactical summary. We have plenty of symbols that are better than 2-to-1 on the auto framer. The big winners today was Walmart, which closed today positive at 0.46% up. The big losers of the today were like AXP at minus 9%. Boeing was down 12%. Dow Chemical down 7.5%. So that was just that kind of a horrible day. In the ETFs, the big winners in the energy sector was oil, gold, silver, treasuries. UDow, that triple inverse Dow, was down 13% today. Still plenty of things test out well on the auto framer. In the pinch and stretch, I'll just point out that the ones that are the furthest below their Bollinger Band mean have become good candidates for reversion to the mean trades. Remain Mexico, real estate, Coke. In the auto framer, plenty of symbols that where we get favorable reward to risk ratios on a retest of their 10-day high. So like Brazil right now is 4-to-1 reward to risk on the upside. Other names in there that we would look at, in particular Japan, Walmart, Boeing, Disney. On the daily squeezes, these are ones where today's range was small compared to the typical range, and so candidates for big breakouts would include Brazil, Cisco, McDonald's, UDow. So the indexes themselves are in a great posture to be traded. You can see from the MACD histogram, everything is basically in the spring. When that's the case, I look for things that are that have the highest MACD Z-score. So these are the ones that have the strongest relative strength. And so that's going to be like Cisco, Intel, Pfizer. And then on the ETFs, that's going to be Japan, Euro-Asia, Technology, Energy, and then Diamonds. You can see from the multi-time frame NDX analysis that the ones that are in the best posture on their 10-day NDX, Caterpillar, Pfizer, ExxonMobil, Treasuries, Silver, and Healthcare did pretty well. Treasuries in the green at 88 did very, very well today. The one interesting anomaly in here, or I guess the two anomalies were USO had a breakout of its 3-day trading period. So while it's been horrible in all the other look-back periods, today energy and oil had a big spike. So that was the counter trend move today. So that tells us that things like Chevron and Devon Energy are could be trend buckers. So if the market's down tomorrow but energy's up and I needed to go long, then I'd be looking at XLE, Devon Energy, and Chevron. And then Walmart was the other anomaly. It actually held up pretty well today compared to its 3-day look back. So Walmart's in a great relative strength position. You can see in the market mosaic, today was a little give back in the after 5 or 6 days up. We're still quite a distance away from the long-term average in terms of the slope stat of the S&P. We've crossed its 10-period moving average, so that makes us cautiously optimistic that this could be a swing low, and we're trading it as if that's true in a measured way to the upside. Yeah, and that's everything I want to cover from the daily report. Now, hopefully, we're still not getting the feed from TC2000. So I will record a speed run later. I will the one I really want to highlight in there is the weakness in Simon Property Group was down 14% today. So we've been tracking that one carefully on the swing trade. I would have you go take a look at that. Commercial real estate is just poorly positioned for this downturn, this recession that we're in, because they're squeezed between the rent payers who don't have the money because their businesses aren't running, so they're not going to be able to pay the rent, and yet Simon Property Group owns smaller commercial properties, so they're not getting the same kind of high-level corporate bailout that the other big banks are getting. So they're being squeezed on both sides. So Simon Property Group is really suffering badly, and so that's why it's a high priority to me for that swing trade. Okay, so that's everything I wanted to cover tonight. Thanks for your kind attention, and I'll get this thing processed